Hello guys, welcome to my presentation where I'll talk about the RTH model and the 6am model. These two models combined are basically an MMXM, right? The way I see it is with the MMXM logic, right? It might be overcomplicating it, but at the same time, I'd rather have deep insight of price rather than other people looking at sweep, entry, and take profit, right? This is my most expansive and up-to-date model that I have. I am developing it as I'm going. I do still need a lot of data from it, but it looks very, very promising. So let's get started. First things first, 6 a.m. is the time-based original consolidation, okay? Mark out 6 a.m. to 7 a.m. and mark out the bodies, only the bodies, okay, on the 1 minute chart. 7 to 8 a.m. is the no trading zone. That's just for me. That's just a rule for me, okay? 8 till 9:59, so before the 4 hourly candle open, which is 10 a.m., is the trading zone to frame an MMXM, right? 10 a.m. onwards can complete the MMXM using the 6 a.m. as a drawn liquidity, right? It's a can, doesn't mean it will, okay? Standard deviations are useful if one side is swept within the 7, 8, or 9 a.m. time frame. Midpoint of original consolidation is a very, very interesting spot for rebounds, okay? And second thing second, this is the LTH model. 9:30 should be the exit time for a trade, okay? Based only on the 6 a.m. model, okay? As the RTH gap might go for a fill, okay? It's a might, since the RTH gap gets filled on average 70% of the time, okay? The data has not been verified by me. That's something that's very key, okay? If there's RTH gaps left over, they can be used later for a fill for either news or important announcements, okay? So, as an example, how Trump had the tariff announcement, you can kind of gauge by looking at the RTH gaps that we did go for almost a full fill of two different RTH gaps. So that's just something that I want you guys to look at. There's also different entry models, right? CE of original consolidation can be used for an entry model based on narrative in price, okay? Because CE of original consolidation can be used for rebounds and everything. I will show you guys the examples later on in the video. Immediate rebalances do seem to have a great strength if it's in line with the RTH gap fill narrative, okay? The drawn liquidity for the base case scenario can be either the RTH gap fill or the original consolidation as liquidity. And let's just have a look at the images right here, okay? So we have the time-based original consolidation, okay? It starts off from 6 a.m. till 7 a.m., okay? The reason why I've expanded this is for something that we're going to see later on. But for now, let's focus on this. What did price do? Price, I don't seem to have the time right here, but we have swept the outside of the original consolidation. This whole swing from bottom to top, right? That took out liquidity, you can use that to frame your standard deviation. And then you can kind of gauge if you want to go for a sell. There's a bit of taps in the equilibrium right here, so you can use that to go for a sell and go for the -2 deviation right here. Or else what you can do is wait, okay? Wait for either price to go and tap into the original consolidation, causing a return to original consolidation swing, or you can wait for 9:30, right? One thing that's important, as I've noted before, is to exit the trade before 9:30, because as you guys can see here, price went down, it rebounded during 9:30, so that's the 9:30 candle, right? And then it went exactly for the CE of this time-based original consolidation. You can only see that's only the bodies are marked out right here, okay? We hit the time-based original consolidation. I was in a long trying to aim for CE, but I didn't get filled on my TP right here. I had my target as the equal highs right here, and I did get stopped out as well. But that's not important. What's important is to read the price in this case. And as you guys can see, we had a very, very clean tap of the CE of the time-based original consolidation, which again is 6 a.m. to 7 a.m. And then price just went and dipped. So you can kind of gauge right here that price is sort out rebalancing just around this area right here, and there's equilibrium right here. So the market engine in this case is a valid concept. I've talked about the market engine in one of my earlier videos, and I want you guys to have a look at it because it's very, very interesting. And as you guys can see here, we left a breakaway gap as well right here. We have accumulated liquidity, and then we have dumped down. The reason for this OT level that I framed, I think, was because of an entry that I wanted to chase. But anyways, this trade was pretty straightforward right here, and it did take me to TP, in this case -4 deviation. Okay, so that was the first example. Second example, let's have a look. So still 6 o'clock to 7 o'clock, right? I only marked out the bodies, so they're low and they're high in this case. 7 a.m. hit, and guess what happened? We broke out above, right? This was at the stage in which I haven't figured out the standard deviations, and it doesn't matter either way. So what happened right here is that price, first of all, it kind of tapped into the NWOGs and rejected straight away, okay? And then what price did, it returned into the time-based original consolidation right here. It accumulated, right? It made a turtle soup as well right here, trying to fill this BC right here. And then it price just went and shot up to this buy side liquidity. I did hit TP in this case, of course. The entry that I had was a bit whack. I could have waited a bit more for the BC fill, but I've just entered right here and I had my stop loss at the low of the time-based original consolidation. You can refine it as well as you go, but this was on my earlier stages, and it is a pretty strong model, to be honest. Next one, let's frame this one. This was still on the early stages, but I just wanted to see how the reaction of the CE of the 6 a.m. to 7 a.m. body candles worked along with price, and it did work quite well as well. So I framed the regional consolidation before FP right here, and we did see an IFED as well right here at the first presentation, and then we can see that we rebalanced into some buy side liquidity and also a bearish fair value gap. I don't have the date for this. Actually, it's on the top left right here, so you guys can go and check it out yourselves. And then what happened is that we made a turtle soup right here at the highs, and then we went for a gap fill right here, and price just retraced, and I just managed to snipe along right here using the time-based original consolidation at equilibrium as my entry. And I did aim for this buy side liquidity above, but I had to close early since I had to leave my house. But yeah, luckily I did get out right on time, and price did dip back again. And I don't know what happened after that. But yeah, this was a pretty good trade that I framed. It only took me like what 1, 2, 3, 4 minutes to just get filled to TP in this case. So this was good stuff. We had both the RTH gap fill and the IFL fill as well right here, as you guys can see, since price did have high targets, in this case the high time frame 50-minute liquidity and a bearish fair value gap in that case. So that was a good thing. And then let's talk about this example right here, okay? So 7 a.m. just struck right there, did frame my time-based initial consolidation. We can see that price did sweep the liquidity above, it did tap into an NWOG right here, and then price just dipped down to the time-based original consolidation. I had my long right here, and I took out at this buy-side liquidity right here. This sells that you guys see here was me experimenting to try to catch the return to original consolidation, but I kind of failed in it, and I did have a tight stop loss as well, so that was fun stuff, to be honest. And then you can see right here that price did go up, and it did rebound off the NWOG right here. So I did take 2 entries right here, as you guys can see, and I had my partials just up top here, and then just full TP hit right here. Reason being is because the NDOG was the drawn liquidity in that case. The market wanted to rebalance, so that's a market engine right there. And then what happened is that 9:30 open, okay? So I have my markups right here. Trade taken based on IRBs above and aiming for time-based original consolidation low. Candle body high, and yeah, that's just me getting filled wrong on my entry. It should have been like around here or something. But yeah, as you guys can see, we did tap the first presentation, but it doesn't matter. Either way, from my entry just around here, we did manage to hit the time-based original consolidation, in which I did take a partial, and then price just dipped into the sell side liquidity of this 6 a.m. range, 6 a.m. to 7 a.m. range. So this was good stuff, to be honest. That's it for the video. So I hope you guys liked the video. It's very brief, and you do need to have some type of knowledge about ICT and the MMXM as well. I have everything linked on my Discord server, in which I talk about the MMXM models, and I also have a video linked from ICT that I want you guys to watch as well. So yeah, that's pretty much it. I hope you guys like the video. Make sure to give me ideas, suggestions, even comments about how I format my videos. And yeah, I'll see you guys in the next video. Bye bye.